when you look at tax planning, you can't look at it in a box. You can't look at it with closed eyes. You got to look at it over a long, extended period of time. The example I'm going to give you here is as follows. Let's say, John, I heard about this great thing called Section 179. I want to pay no taxes this year, get my income down to zero. Great, we got your income down to zero. Their tax bracket that year was zero because they had no taxable income. That client that year feels great about that, but it's not a good idea. I'll tell you why. Because if you're in a low tax bracket because you had low income that year, this year that tax break could be worth 15% tax savings to you, or maybe zero. Where sometimes if you spread it over time, if you anticipate that this year was your big low income year, I may not take Section 179 or this other special bonus depreciation. Because I'm going to say, I'm looking at the big picture here. Yes, I could save you 10 or 15 or 20% for every dollar you spend, but I'd rather save you 50 cents on the dollar and we'll spread it over the next 3, 4, or 5 years. So tax planning has to be looked at not just on a year-by-year basis, but what is going to be different next year over the next 5 years. Many people don't think about this. And again, the single most important thing we do for our clients on the dental CPA side of our practice, which, by the way, I mentioned to you before, that part of the business is headed up by my son. His name is John Jr. This is what he does all day long. So we do mid-year planning meetings for clients, especially those that are new startups, because they need a little extra hand-holding. But we do year-end planning. That's the busiest time of the year. People think I'm crazy that November and December is the busiest time of the year in our practice. That's when we make the biggest difference in people's lives, because we position things so that you're going to pay the least amount of tax possible. And let's say a dentist is sitting at the end of the year with a $200,000 profit. He's debating about buying a piece of equipment. Well, guess what? It may make sense for him to buy that equipment and place it in service this year so that we get him under a certain tax threshold. So again, by far, the single most important thing you should get from any tax advisor, it's not the tax return. That's the easy part, right? That's compliance. It's the thought process. It's the tax smart strategies. It's the implementation of these strategies. At the end of the day, we already know we're all government employees, right? We work for the government for half the year. Why not work for the government a little less and be able to take advantage of keeping more of what we make for ourselves and not give it up in unnecessary tax dollars?
Yeah, those are great points, and two things I want to elaborate on exactly what you just said. Our meetings, when we would meet for tax planning, our meetings in the fall were way more involved than our meeting around tax time. I mean, our meeting around tax time was you were just checking in, making sure our projections were lining up. And if there was anything, let's say I did end up buying a bigger piece of equipment than I had thought I might when we met, say in November, we would make those adjustments accordingly. But the tax prep time in the spring before filing was much quicker, more efficient, because we had it all set. The meeting that took the time and exchanging the emails back and forth, following up, was in the fall, and that let us do great tax planning. And I want to stress to all the listeners and viewers, it is so important that you find an accountant who has that philosophy, because so many things you saw, and when your team did a full review of the bookkeeping of that year, when you saw that and said, hey, this is where you're coming in, you're going to be pretty high here. You want it, if you have it, you want to maybe put that extra order in for these supplies, or make the investment in that piece of equipment and take advantage of the Section 179 this year. And there was time for me to do it. Whereas if you meet with them at the very end of the year, the beginning of the following year, you're out and you're kind of left with what you're left with. So that is one thing I would say helped and saved a tremendous amount over my years of practice working with you and your team.
Again, our busiest time of the year by far is November and December. Doesn't make good for the holidays, with Thanksgiving, Christmas, New Year, because we're working our butts off, but we're doing it with a passion because we know we're doing the right thing for our clients and we're saving them tons of money. So if your tax advisor takes a 2-week vacation, in December, you know he's not doing the right thing for you. This is the time of the year where you got to roll up your sleeves, do all the heavy lifting. And then what happens is there's going to be no surprises come April 15th or March 15th, because you did an accurate projection, and we basically plan for what's to come. So that's the other big thing people absolutely hate. All of a sudden they think life is great, and then all of a sudden they get a notice on April 15th from the account. By the way, you owe $300,000. Well, why didn't you tell me about this before? Well, they didn't do any planning, and they waited till the last minute to file. So being prepared when it comes to this is critically important.
No, it's huge. And it was, I can honestly say, working with you and your team, that never was the case. The surprises are surprises, but the questions and the discussion always happen proactively before the end of that tax year, with enough time for me to make the appropriate adjustments. And then when we met again in the spring, it was more just like, how did it match up? And usually it was quite accurate, because you would tell me these are the things you should do. And I would say, should I do these things? And we'd go back and forth, and we'd create a plan and put the plan in place. And then come tax time, it's like, okay, it wasn't a surprise. So I agree. I can't stress that enough. I hear so many clients say, I owed so much more in taxes than I thought I was going to owe, and I've got this big tax bill. But that's a planning problem. I mean, you really, that shouldn't be happening to you at all. You should have an accountant who, your CPA should be seeing that and heading it off at the pass and planning proactively.